Hi, everyone, and welcome to another executive interview. Today, we have a captivating conversation lined for you. So, we are diving into the world of high yield industrial property investments with Ben Greentree, Director at Civil Construction Solutions. Ben's here to shed light on their unique approach to property development, how they manage risks, and the enticing investment opportunities they offer in the $5 million to $30 million industrial real estate segment. Welcome, Ben. Thank you for joining me today for this interview.
Hi, Rhythm. Thanks for the opportunity to talk to you today.
Absolutely. Now, Ben, to begin with, can you tell us more about the unique position that Civil Construction Solutions holds in the Australian industrial property market and how this sets you apart from traditional developers?
Yeah, so to give you some background, we're all civil engineers and have got a combined experience of 100 years working together and delivering projects worth over $1 billion. And that's been working for contractors or clients, managing contractors on varied infrastructure projects, civil infrastructure projects, from small to very large. So we've seen projects from feasibility right through to completion, and we understand the risk management process that is entailed in those projects and how thorough that needs to be to achieve a successful outcome. So what we're doing now is we're transferring those skills we've learned into the property development world, namely the industrial property development space. And that's an area we understand because essentially these projects are civil engineering projects. So we're now targeting sites that we understand, and something that sets us apart a little bit from other developers is that we tend to use more equity than debt in the early stages of the project, and that just lowers our risk profile. And from the outset, we're looking at projects that have a short time frame with a good net profit with a low risk profile.
Amazing. That sounds a great investment opportunity for sure. Now, with a strong focus on due diligence and risk management, how do you ensure the safety of investments for potential co-investors in your projects, especially in the dynamic real estate market?
Well, firstly, it's worth noting we invest our own money in these projects alongside investors as shareholders, and that provides alignment of outcome for both us and the investors. So before a project starts, we have a fairly strict feasibility, a high-level feasibility that we look at to either pursue projects or not. And if that passes our test, we then enter into a pretty thorough due diligence process where we look at quite detailed design and concepts, end product that we're trying to build, what risks are associated with that product, and setting aside healthy contingency allowances, working out how much the job's going to cost, and then more importantly, getting a valuation of the completed product done independently so that we've got some certainty over what the project will look like at the end. And at that point, at that gate, that's where we say go or no go, and that's where we start raising money from investors, and we present that information to them, and all going well, and the project gets off the ground, that's where we look to raise capital and then purchase the site. Then from there, we're now holding land with equity rather than debt, which allows us to not be at the mercy of interest rates and longer term holding costs. We get into the approvals phase with council. We start pre-selling the development, which again covers our risk as we enter into the construction phase, whereby we do start taking on debt covered by those pre-sales. We manage the builder through our experience in delivering projects. And worth noting as well, if we need to, because of our background, we can step in for the builder if need be, although that's not our preference. Then completion of project, final stage is the final sales, return of capital and return of profit. So along the way, right up until construction, we're not in debt, which is to keep our risk low. And at each of those gates, there is an exit. There's a possible exit if we need to, should market conditions change.
Understandable. Now, could you provide more details about your current and past projects, including expected returns for investors and how your projects have delivered solid returns so far?
Well, there's a large array of engineering projects that I won't go into detail here, but they are available. All of those are available on our website, which we can share the details of that later. But specifically on industrial developments, our first project was like a proof of concept, if you like. That was a $2 million development on the central coast of New South Wales, about an hour north of Sydney. and that delivered a target return we were aiming for at that stage. And that was our proof of concept to do another development in the same area, whereby this one was a $5 million development. Again, target return was achieved. That was over 20% return per annum to investors. And now we've got a current project in Brisbane. It's a $25 million project. It has development approval, and we're due to commence in construction in January 2024. And again, on that one, we're targeting the 20% return. It's forecast to return that 20% per annum. So that's the current projects.
Mm-hmm. Amazing. Now, can you explain the niche that you've identified in the $5 million to $30 million segment within the industrial warehouse sector, and how it presents a substantial market opportunity with limited competition?
So the niche for us is, as I've said, civil engineer into industrial, which is essentially civil engineering. We're building a product that's in demand at the moment. So it's a flexible space warehouse unit development of different sizes to cater to different, whether they be owner occupiers or investors. Again, we're targeting to get even more narrow niches, like a niche where if there's an engineering problem with the site that might dissuade other purchasers from buying, we can help solve that challenge for the vendor selling the site if it works with our feasibility. And finally, within that $5 to $30 million range, we're tending to see that at around $5 million end value, that's starting to get too big for individuals. There's not too many individuals doing projects of that size. And then at the upper end for us of 30 million, it's too small for the large scale institutional developers to work in this space. The opportunity we see currently, industrial real estate is in demand. And the reasons for that are generally in most markets, the vacancy rates are extremely low, and there's a shortage of ready to build on land. It's difficult to get land approved and zoned for construction. So there's not a lot around. So there's demand for the end product being the buildings, and that's the space we're in. And the opportunities for us where population growth is happening and residential activity is happening, where industrial tends to follow, are the areas we're in now, which is Southeast Queensland and also the Central Coast of New South Wales.
Absolutely. Now, your investment opportunities are offered in the form of Class A shares in an SPV with an unencumbered title to land. So what benefits do investors gain in this structure, and how is their investment secured?
So just to be clear, with our company, Civil Construction Solutions, that manages the developments. So it might manage multiple developments. But for investors putting in capital to a particular project, that would be an SPV or a special purpose vehicle set up specifically for that project, typically a company with shares that investors purchase shares in that company. The security is that we're all Class A shareholders, ourselves and investors, and each of those shares are linked directly to that land parcel, which in the early stages, as I've said, is held by the equity in that company. The benefits to investors in this sort of space are that we're in that niche between 5 and 30 where it's too big to do on your own generally. So you get the opportunity of being able to get into this market, and then being an equity holder rather than, say, an individual lending money to this project at a fixed rate. Equity means should there be an upside, there's potential to share in that upside together.
Mm-hmm. Absolutely. Now, before we let you go, Ben, as a parting question, can you share with our investors details about any upcoming projects? What should be looking out for?
Yes, so we've just settled on a project on the Central Coast, which is kicking off right now. That's due to be delivered over the next 2 years by 2025, and that one's closed for funding. However, there are 2 more projects ready to kick off in 2024. One of them, we have passed due diligence and it's ready for capital raising now, and that's due to settle in January 24. So that's definitely an opportunity that's in the short term. And in the short to mid-term, later in 2024, we have 2 sites that are further west of Brisbane, out in Logan, and they're in the due diligence phase now. So there's 2 projects in 2024, and we're going to continue progressing that pipeline over the next coming years.
That all sounds very exciting, Ben. Thank you for sharing your insights into the world of industrial property development and investment opportunities with Civil Construction Solutions. For anyone who would like to get in touch with the team, please see the details at the side of the screen or in the description of this video. And to our viewers, thank you for joining me for another interview. Stay tuned for more engaging conversations with business leaders and entrepreneurs, and I will see you in our next interview. And thank you, Ben, and I wish you all the luck with your venture.
Thanks very much, Rhythm.
Thank you.